Business is booming. Hey everyone, I'm Josh Kepke and welcome to your monthly update for the Greater Vancouver real estate markets. The Canadian banks are now pumping out residential mortgages at an impressive pace. Residential mortgage growth is now humming near 6%, a rate of growth we haven't seen since just before the introduction of the mortgage stress test back in 2017. It does make perfect sense though when you think about it. Issuing residential mortgage loans is viewed as the safest loan a bank can make. The residential housing market has become so large and so important that it's become that important to the Canadian economy that it has an implicit backstop from policymakers, whether they like to admit it or not. Remember, commercial banks create over 95% of our money through loan origination. The bulk of that origination is from mortgage credit. Housing is the collateral on that credit. Therefore, it's in the bank's and the government's best interest to support that collateral. Once you figure that out, things become a little more clear. So here we are. National home sales are running at record levels and prices are up double digits so far this year. Meanwhile, HSBC just undercut the big six banks, launching Canada's first ever mortgage rate below 1%. They will offer a 0.99% mortgage to all new insured federally guaranteed borrowers. HSBC summarized the milestone, noting, "We view mortgages as a key relationship product. We look at the customer relationship as a whole, not on an individual product level. And mortgages are a good way to acquire and retain customers." If you want to figure out what direction the housing market is heading, just watch the bankers responsible for creating the loans. The mortgage business is booming, even in a pandemic. So, how's the market in Greater Vancouver based on the November 2020 stats? The Greater Vancouver detached home sales jumped 29% year over year in November. It was the strongest November since the 2015 bull market. New listings picked up a bit, growing 12% from last year, but have so far completely failed to keep pace with the sales volumes. This has resulted in inventory remaining subdued with just 3.4 months of supply for sale. Low inventory creates bidding wars and higher prices. Sticking with our theme from last month, we can see that 28% of single-family house sales sold above the asking price in November. This is down slightly from the 30% recorded last month. Still impressive considering November is seasonally a slower time of the year for the housing market. With frequent multiple offer scenarios, it's no surprise price growth continues to accelerate across the single-family market. And per the official MLS Home Price Index, prices were up 9.4% year over year in November. Keep in mind, this is a lagging indicator, so this will continue to inflate higher in the coming months, regardless. More leading indicators, such as the median price and the average price per square foot, are showing 11% increase on an annual price gain. Clearly, people want more space and they're willing to pay a premium for it today. When we look at the condo market, it's a bit of a mixed bag. Sales were up 13% year over year, and from a historical preference, it had a pretty decent month in November. However, the problem in the condo market continues to be the persistent strength of new listings. In November, there were over 2,000 new condo listings. That is the highest monthly total we've ever seen. So while sales remain quite strong, new listings remain even stronger. And this has created a scenario where inventory levels remain at a 6-year high for the month of November. Although keep in mind, the last 5 years were marked by chronically low levels of supply, resulting in rampant price inflation. So we're getting back to healthy levels of supply where the months of inventory for sale rests at 4.2. 4.2 months of supply, though, is good enough to soften prices. This is putting modest downward pressure on the condo prices, as shown by the average sold price per square foot, which officially dipped into the negative territory in November, dropping 0.5% year over year. The media is still reporting positive increases in the condo market because they are reporting the MLS benchmark price, which is a lagging indicator. There's no question the condo market has been undergoing modest price correction since the pandemic. And I expect that to continue until the investor confidence returns to the market, which I believe will be sooner than most people anticipate. Again, time will tell. If we look ahead, in the coming months, there is very little to suggest anything will change. Policymakers have their foot on the accelerator of both monetary and fiscal policy. Once again, the Bank of Canada has made it clear they will not be raising interest rates until 2023 at the earliest. There is no level of society that can tolerate rising real interest rates, and so interest rates will have to be artificially manipulated lower. It is clear that policymakers are trying to get the economy back on its feet via growth in the housing market. Banks are actively lending into the residential housing market. And just to take a look at residential mortgage credit growth, which as of September is now growing 5.7% on a year-over-year basis. Further, despite already recording record home sales across the nation over the past few months and double-digit price growth during a recession, the federal government announced they are expanding the first-time homebuyer incentive in Vancouver, Toronto, and Victoria. While the program had very little take-up over the past year, the recent revamp of the program should spur more applications, but more importantly, signals government's intentions of further support for the housing market. With this in mind, and a vaccine on the way, I believe we could actually be in the early stages of a new bull market. From a rate of change perspective, the sales comps will be very easy to beat from now until at least June 2021. What I mean by that is you will see sales continue to beat last year's comparisons until at least next summer, when the sales comps will then become more challenging to beat. In other words, the media will continue to report strength in the housing market because both sales and prices are almost guaranteed to be on a higher year-over-year basis until next summer. Perhaps that will finally prompt investors and speculators to get off the sidelines as they're bombarded with positive media headlines. Combine that with a vaccine and even a slight pickup in immigration, and it should ease some of the ailments of the rental market. Ultimately, again, time will tell. However, I strongly believe our worst fears of widespread house price declines are behind us. While mortgage deferrals are unwinding, and that still remains a key concern, it seems that both monetary and fiscal support could ultimately outweigh those risks. So follow me on Instagram for more micro market updates, pro tips, expert interviews, motorcycle adventures, and of course, pictures of my dog. Need an honest agent to represent you in a purchase or a marketing expert to list your residential property for sale? I'm available for that too. Call me at 604-313-9805 or send me a DM to book a consult. Questions or comments, put those below. And otherwise, you have a Merry Christmas and we'll talk to you soon. Bye for now.